The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, and this is an early hour. This is the 8 a.m. Eastern Time, 1.5 hours before the market opens, and this will be recorded so we can play it again at my usual time, noon, which I can't make today, Friday, the 8th of September. So here we're looking at pre-market. The S&P is down 7. This is very interesting. I have a way of looking at the market. And essentially it says in a bear phase, the S&P invariably opens down a good double digits, 12, 13, 14 points. Intraday, there are rallies that fail. Lower lows and lower highs are formed. And at the end of the day, the S&P futures close down at or even worse than they opened. And it happens maybe 2-3 times over a period of a week, and that occurs successively. The Dow has triple-digit down days. Maybe it doesn't close down triple-digit down, but there is severe selling. And the volatility index, which right now is at 12.11, still under the teens, goes into the teens, usually the 14-15 area, and holds there. And that continues, and the theme, the overwhelming theme, is a negative theme that the market picks up on. It doesn't matter whether it's positive news or negative news, the market perceives it as negative. So what we've seen instead, since the summer of 2010, and the low was in 2009, March, what we've seen is this rotational aspect where markets take the best sector and allows it to pull back. But instead of having what I call a Granville sell, that's like Joe Granville, who used to say in bear markets, 95 or more % of stocks go down. But instead of having that, we've had this rotational aspect where other sectors pick up the slack. And because of the weighting in the various indexes, you don't have those indices closed down sharply. Instead, the selling is ameliorated by buying. I wanted to talk about that because today's what we usually talk about in my show on a Friday. I call it Technical Friday, where we go into the Chapman wave in more detail. Let me just now quickly do something to show you. This is the basic concept in the Chapman wave for those of you new to it. Identify the lowest low bar and merely count each successively higher peak to higher peaks, alphabetically, sequentially. And when you get to that fourth highest peak, peak D, A, B, C, D, other things can happen. It can recycle, even go to E, F, and G, or recycle completely and have another buy mode all the way to a D or an E. That's an extremely powerful technique. And what we're looking at is in the E-mini, the S&P, this is still September, we went to an E at 2488.50 on the 8th of August. We've used time in this pullback because it went down to 2419, and now we're rallying and we've been to 2479, and today we're trading at 2459. This is just using time. The S&P right now is only down, I say only down, but it is down, minus 750. The 9-period exponential moving average, this black line here, is at 24, let me just double check, 2459, 2460. The MACD, the moving average convergence divergence, had a huge move up to the highs, all-time highs, and now it's rallying. It's good, but it's not great, but it is good. And the histogram, the 0% line, is positive. The stochastics are 76% under the 80% level, which says, okay, be careful. But in the meantime, prices held very well. On the right, all the way across, this is a weekly chart with a peak F in the Chapman wave and a Chapman wave 5, That's usually a negative sign. We've had a pullback, but really, until the S&P closes decisively underneath 2450, the 9-period moving average in the weekly chart, we have to consider this is just a sideways consolidation. This rotational correction is still unfolding. Hey, wait a minute. This is the 120-minute chart, and it made what we call in the Chapman wave. It had made a peak D, and that was that sharp slide from 10 o'clock on the 5th of September, comes all the way down to the 2440s, then rallies back to the 2469 area with what we call a double top at peak C1, C2. And then I drew in yesterday for my subscribers to my opening call. I said, okay, now we've got an arch, which is also a rectangle formation, and I drew in the rectangle. You can see we're in the rectangle. And what will happen is if the S&P goes underneath 2456, it breaks this 200-period exponential moving average. It's into the territory that it was in on the 5th when it ran down so sharply. So I'm making it real simple. Now we're going to go to the Dow. I'll go to the cash, although I could go to the futures. I just want to do this for the moment. For me, a close on any daily basis, a close below 21,700, let's call it 21,690, suggests that there's going to be another arch formation. Let me make this a little clearer right there. An arch formation. Remember, this is live, but live at 8 o'clock, well, live at 8:12 a.m. this morning, more than an hour before the market opens. And what we're looking at is this little dash trend line support. And it says a break, once again, 21,715. I'm making it this low right here, 21,709. A move underneath there says you've got that arch formation, which would then say, watch out, we could be going to the 21,600 level. Okay? That's if it's holding at the close today. And there's bad news over the weekend. And let's just hope that this hurricane is going to deviate from its trajectory. And in fact, there are no lives lost. And maybe there's damage, we can repair damage, but lives lost is something else. So our thoughts are with those people in southern Florida. What I'm looking at here is the Dow has made a peak D, and it needs to close underneath 21 right here. The 9-period moving average in the weekly, which is 21,755. If it closes decisively below, we have to consider that the daily has gone back to a sell. It's actually still in a sell mode, but the weekly has joined in back into the sell mode, and that would suggest that you've got lower prices to come. I'm making it simple. A close in the next couple of days below 21,600 in the Dow is very negative, and we will have continuous lower lows and lower highs into the following week. A move that says, and this is going to be so interesting because look, what we've got the IBB, which is one of those sectors where fund managers are rotated into, holding extremely well. If it's at 335, if it breaks down and goes below 328 in the next 2-3 days, that's a big negative. But even the weekly chart has successfully rallied. There's the 120-minute chart. We don't need it for now. What I want to look at is the monthly, and the monthly is in a leg D in a resistance area. So as we come back, we'll start talking about all the different, the other indices. We'll go through sector by sector. In the meantime, I want to say the IBB and the SMHs are going to be big clues because they've held well. If they break down today, the general markets start to pull back. I'll be right back. Basil Chapman.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So just looking at the 10-minute chart quickly on the E-mini, you can see we've had gentle moves to the downside. Yeah, in price, it's quite steep, but look, it's just a trend line down. Trend line is a beautiful down channel. And here we are, down 6.75 in the E-mini. We should be down 12, 15 points. We could still be by the time this show airs again at noon. We could be that. But I'm just suggesting to you that for my subscribers, we actually have a lot of long positions. We do have a short the Dow, position in the Dow. But I kept looking and saying, you know what? Let these stocks play out. They're most of them up nicely. They have a bit of a cushion. I want to let them play out. They should all have tanked on yesterday, and they didn't. So I'm looking at this and I'm saying, steady, keep your thoughts clear, don't be overwhelmed by news, and now let's go through all the different sectors. So if we're looking at the SPX, remember I gave you 21,600 is absolutely key support for my work in the Dow. A push into 22,050 says, we're still going to be doing some testing of the upside. I'm just keeping it as simple as that. The S&P, you can do the same thing. At 24.65 right now, the cash, obviously the E-mini says you're at 24.59, you're down 7. But at this particular point, make it real simple. A close below this low of 24.59.20, the low of the 6. No, I'm sorry, 24.46, I meant to say. The low of the 5th. Says be careful that arch formation will probably want to test at 24.30 and then the low. Very important to hold the low of 24.17 made on the 21st of August. So far this is still, in fact, the cash would be, if the market opened right now, just a little under the 9-period exponential moving average. It's the close today and Monday that's going to be absolutely imperative. Why? Because if we see the sectors that have held well, the SMHs, the semiconductors, and the IBB, the biotechs, if they hold well today, it says, hey, we could go down selectively, but watch out because there's still residual strength. And that residual strength I consider to be absolutely imperative to monitor. Now let's get to the nitty-gritties. In the S&P weekly, that's not as good as the Dow, not as good looking. The technicals are poor. It is above 24.52, the 9-period moving average. A close any week between now and this Friday and next Friday below 24.52 suggests, be careful. Not only will it impact the weekly chart, but it'll impact the monthly chart. And all the monthly charts so far are really strong. I had a question in the den about the XLF and the KRE. That's the S&P Select Financial Spider Fund. Very serious decline. And what you look at is that American Express came tumbling down after a peak D in the Chapman wave, and then an F in the weekly chart, only a leg C in the monthly. But look at this. Visa, which has just been outstanding, has made a leg D. So this is that rotational aspect. Even within groups, you're seeing rotations. So within they call them the credit card companies, or they're not all purely just credit card. You've got Visa in leg D at 104.56 yesterday. It's down a penny at this particular point, pre-market. Leg E in the weekly and leg D in the monthly, and a spike in the 120-minute chart that says, let's watch closely, 103.58, the 9-period exponential moving average. But most importantly, going into next Tuesday, Wednesday, coming up, 102.26 needs to hold the support. If it breaks, you've made a peak D. You're probably making a peak E in the weekly chart. Be careful there. Look at MasterCard, MA, trading at 137, round number right now. Made a high of 138.64 on a gap up. Made a leg E in the weekly and a leg D in the monthly. And this is saying to me that the XLF, which has 5 financials, Goldman Sachs is included there, not a good chart, not a good looking chart. So I'm suggesting have patience, wait for the yields to change, wait for a lot of things to happen. Just give it a little time for the XLF and the KRE, which is the S&P right here. KRE is the S&P Regional Bank Sector ETF. Also not looking good. Have patience there. I wouldn't be jumping in. We were in. We took a very small loss yesterday on a small position. I'm just not interested, or day before. I'm just not interested right now. Let's go to the TLT just to show you. Trading at 129.39. This is the Lehman 20-year Treasury bond fund. It's in this inside track resistance. There's a pattern that we look at in the Chapman wave where you go from the left side to the right side in a cup or an arch formation. You count the number of bars to the midpoint. I call it the plumb line. In this case, it's a little doji low of the 27th of July. And we went right to it. We broke into the 128.57 high of the 26th of June in the cup formation, pulled back, it went to 128.52, 5 cents lower, pulls back, makes a cup and a handle, breaks to a leg D. This is a pattern that we've got to watch closely, because the cup and handle then makes a little handle and then pops up and then goes to a D, in my work says, just watch this very closely. Why? Because my contention has been, and this is leg C in the weekly, which is a positive, and leg C in the monthly. My contention has been that if the market is going to seriously pull back seriously, you'll probably see money flow from the fixed income into the out of equities into fixed income. And that would mean that you've got another boost for yields to come down as the this sector becomes favored for a security reason. So if you're looking at the TNX, let me just show you this. This is I show my subscribers to my opening call every weekend. I start sending out charts on Saturday, Sunday. You get them 24 hours a day for 7 days a week. Anyway, you're looking at the TYX, the 30-year yield, down at 26.62. And it's made a lower low. It's in this down trend line. It looks like it might want to test it. 25.72 is going to be a really important support. And here you've got the 10-year T-note yield breaking to a lower low. You've got the 5-year, the cyan-colored one. The TNX is the 10-year. FVX is the 5-year, also pulling back. So this is very interesting. Now, here's the conflict. In wood, this is the iShares Global Timber and Forestry ETF. You've made a new recovery high. This is a really incredible thing. Here's that up channel resistance. We are really close to up channel resistance, but it keeps getting there and pulling back to the bottom of the channel and then going back up. However, the HGX, the Philadelphia Housing Sector Index, is saying, you know what, even with yields so low, we haven't made a new recovery high above 287.12. We're at right now 279.92. No big deal, but it is saying that it is getting real close to breaking that key support. So here we are. What we're watching is what happens to gold, GC. This is up 7 in a leg E. Once again, we've got a trend line. We made the cup formation. It was actually a V-shaped formation, broke out above it, walked the 9-period exponential moving average. This 9-period moving average was supported 1333, 1333, and look what's happening. You're up at 1356. And the MACD is still strong. Stochastics is at 90%. Someone said Chapman wave is not working. Gold, Chapman wave and gold are like water and oil. You know, I would disagree. I think the Chapman wave does a fantastic job. My interpretation stank. I should have just jumped into gold the moment it held the 200-period exponential moving average and said, hey, that's the way it is. It's going to be moving up regardless of anything else that's happening. It was my mistake. No, I think the Chapman wave worked very well. My interpretation was incorrect. I'll be back. Basil Chapman. This is the first 8 o'clock to 9 o'clock a.m. in the morning. We'll repeat it later on. I'll be
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. This is the 8 a.m. hour, and it'll be repeated again at noon. So this is pre-market, and we're looking at the futures. Can you believe the futures are only down 6 at this particular point? That's the S&P. The Dow futures is down 63. We got gold up 7. This is going to be interesting, and I'll explain why. Within the concept of these peaks and valleys that I look at, you've got gold, which ran up to a peak G in the Chapman wave back in the week of July the 8th of 2016. And I wouldn't be surprised if just on a shorter term basis, gold actually stalls close to or just about on that level. It doesn't even have to get there, but I think that we are very close to some kind of a consolidation, and there are a couple of reasons why I'm saying that. And it's more a consolidation. I don't think it's a sharp move down. And the reason is, if you look at this weekly chart of the dollar, DXY, yes, it broke an exact left side, right side price time match to the low of May of 2016 at 91.92, 35 weeks to the upside to 103.82, January, the week of January the 6th, 2017. And if you ever want to see how markets can move up in a steady way and down in a steady way, this is it. I mean, there was this one monster move that the dollar went from the election low of 95.89 to a spiral the week of November the 25th at 102.05. We haven't even seen the equivalent in the downside in the dollar. It's just steady, lower lows, lower highs. 9-period moving average was resistance. And now we are 35 weeks. And we've just broken the 91.92 low, trading right now at 91.09. And that suggests to me that this is the area where we start to see the 91 to 92 level become a magnet for the upside. And that says to me that we could go down a little further, but at some point the dollar's going to try for 91 to 91, 92 area. And when that happens, you will start to see gold take a bit of a breather. And I suggest that maybe next week is a week. And now let's go to, that doesn't mean to say there's a major sell signal. I'm just saying a period of rest. The dollar tries to have a rally and then probably has to come back and do some retesting. And one of the reasons, if you look at the EUR-USD, this is the euro-dollar currency pair, it's in a strong leg up. It's trying to get at 1.205. It's trying to get to the resistance level of 1.212. And weekly chart is still very strong. And if you look at the comparable inverse, the USD JPY, yes, the dollar yen is going to lows, just like the dollar. There's no difference, and it's not a very good looking chart. And that says to me that here again, I think we're getting quite close in price to some kind of a bounce. So it's only a bounce, and that bounce has to come back and test the area it was just in a week or two ago. And that's, as I say, where I think gold could have a bit of a rest. But wait a minute. If you look at high-grade copper, yesterday I mentioned, well, 2 days ago, I thought that copper was close to some kind of a peak, and it's going to have a rest. Yep, copper is down. It's at 3.09. It's down 0.046 after a spectacular move, walking the 9-period moving average in the daily, weekly chart leg D, monthly chart leg D, 120-minute chart pulling back. If we close underneath 3.096, that's going to suggest it's under the 9-period moving average, and it could start to get very choppy with slightly lower lows, slightly lower highs in the copper. But if copper at any point in the next 2 weeks breaks $3, yep, $3 support, that's going to be very negative. A couple of things I want to look at here is within the context of the various markets, we have to be looking at sectors. Crude oil. Crude oil is only down 9 cents here at 49. It had a really nice run to the upside. But what's really important, you see this weekly chart? You see how it's holding? Let me just make this a little bit big. First of all, daily has 200-period moving average that was double top peak C1, C2 in the Chapman wave resistance and a pullback. And that's now at 40.93. That's the 200-period moving average in the daily. But look at the weekly. The weekly chart is suggesting that there's a large arch formation. It's starting a second arch formation, and that under the circumstances, crude oil might not break to the upside into the 60s, but there's a good chance it's going to try to test the 51 area because the MACD is improving. Stochastic's okay at 60, it's not good, but it says to me 45 is absolutely critical support for crude oil, and that if there is a break of this trend line, and the break would be at about 50.30. That's a continuous contract. If you saw that, you would say, oh, okay, now we've broken that trend line. There's another rectangle that we were looking at, but most importantly, that 49.93 level, the 200-period moving average, resistance in the daily, and the high that was made on the 31st of July, it's 50.56. You want to see that become support if crude oil is going to go higher. 51 is the 200-period simple moving average. 49.93 is the exponential, is the one that I use the most. And that's between there. If crude oil goes into that area next week, then we're going to see something else. Now, let me just show you something. I'd given this out during the break to the people in the den. I'd shown that there was a push to the upside in this down channel in the 10-minute E-mini. So let me just put it this way. I said to subscribers this morning, because I always show this chart here. I always show, there we go, ESU17. I always show the E-mini for my subscribers. I show it pretty early in the morning, maybe 7 o'clock, somewhere around there, maybe earlier, maybe just a tad later. And I show the daily, the weekly, and the 120-minute charts so people have a good sense, because it's 24 hours a day. So I've already got the overnight sense. And look, I said 2460 is the 9-period moving average in the daily, and it's holding. Let's see what happens at when my show starts at noon. Let's see where it is. I'm going to make it clear. I said to my subscribers that if the E-mini is down sharply, if the Dow's down, actually, this is what I'd said. Let me go to, this is my daily, my newsletter has just an incredible amount of information every day. So this is the overview that I always give. And what I said is I've got these 5 quadrants right here. This is the Dow 120-minute chart. This is the VIX 120-minute chart. This is Richard Arms index. I treat it completely differently to Richard Arms. I use it as a different indicator completely. It's trading at 1.04 right now. This is yesterday. And this is the bar chart of the Dow daily and the S&P. And what I'd said is, if the Dow is minus 40s, S&P minus 6s, Comp Index minus 15s at 10:20 a.m. Eastern Time or lower, a down close is highly likely. In any case, rallies should be weak today. So I'm expecting that even if there are rallies, but we might not see the smash to the downside that a lot of the information seems to be alluding to. And I say alluding to because if you look at these charts right here, this is my Dow 120-minute chart. I always show it in two frames. One is with just Chapman wave notations and the 9-period and the 20-period moving average. That's the green one there. And here's with the MACD slow stochastic. And you can see this is critical support to hold. And it's the same thing in the daily. The daily has this H pattern. And if it breaks down, you're looking at a deeper correction. So we're looking at this and saying, okay, there's rotational strength. How will it unfold during the session? I'll be right back. Basil Chapman, Tiger Technicians Hour, pre-market. The S&P is down 6. The Dow is down 62 pre-market.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back. Yeah, just keep in touch with the TFNN, and there's a fabulous at 9 o'clock. You'll get Tommy Jr. doing just a fabulous 2-3 minute rap, just to give you an up-to-date market overview. And that's just really succinct and excellent. Then, of course, you got Larry Pesavento. I mean, program just keeps going. You got Tommy Jr. and Tom O'Brien at 10 o'clock. Nadex, they talk about the Nadex platform. And then you've got the Think or Swim options hour, fabulous hour, 11 o'clock till noon. This show will be repeated at 12 o'clock. And then, of course, you got Steve Rhodes, you got Dave White, you got Tom O'Brien back again. Just really great programming. All right, let's go to the market now. So this is so interesting. The S&P futures. Now, what I discussed in the very beginning of the show was that the futures theoretically should have been down double digit. The Dow future should be down triple digit. It could still happen. I'm just saying that would be that's what you would expect in a bear phase. And if you're looking at bear phases, these big rallies that hold quite well without being half-day wonders and one-day wonders and then go to lower lows, that hasn't been happening, and that's what you would expect. So let me just recap. A bear phase, even if it's just the daily short-term bear phase, or even you're looking at a 5-minute chart, as a bear phase when you make lower lows and lower highs, and the technicals are failing, and whatever it is, the news is perceived as bad, and the market keeps going down. You want to see the VIX index soaring. The VIX index should be at, in that 10-20 period that I said, 20 minutes past 10 Eastern time, the VIX needs to be up in the high 12s, maybe even in the 13s, certainly by noon, with the market, with the Dow down 86 to 103 points, the S&P down probably 13 to 14 points, and that's the bear phase. That says, yeah, okay, but you got to keep doing that. So we're not seeing that, and that says to me the rotational aspect is important. And let me show you something. The Thomson Reuters Continuous Commodity Index monthly chart right here is in an arch formation. It's had a successful, if I draw a trend line here, there's been a successful series of higher lows so far, but not lower highs. Lower lows and lower highs at the moment. But it is holding pretty well in the monthly with the technical starting to improve. Look, the MACD hasn't crossed negative yet. The weekly chart has got an up channel or an arch. Is going to be, I always talk about this in terms of competing chart formations. One is the arch formation that says it should fall. There's another one that's the inverted Chapman wave falling axe formation. But let's just think of it as, in this particular instance, I'm going to keep it as an up channel, and it's within the up channel. making higher highs and higher lows in the weekly. The MACD's improving a lot. Stochastic's improving a lot, but still only at 56%. But it's got all this left side stuff to overcome. Look at the daily. Gaps up. Boy, look at this, an island reversal. Where in the commodities do you get, all the commodities, you get an island reversal like this? That's usually a very bullish aspect. So we are long, in my opening call, we are long the commodity index, not necessarily this one, but a commodity index, doing very nicely so far. And I'm looking at this and I'm saying, you know what? This is a leg B. I'm not calling it a D in the daily. This is actually a leg B. At my perspective right now, with the stochastic at 94% and the MACD still very strong, the histogram, those vertical lines improving, I like what I see. And I don't know, I think oil is a little bit, because the weighting in oil on a percentage basis is the highest of all the commodities that is within it. But I think it's a mix of commodities. So this says to me that if it's trading, it closed at 411.37. It's trading right now at 412.86. Dollar TRCCI is how I get it. Thomson Reuters Continuous Commodity Index monthly chart. This is the monthly, weekly, and this is the daily. And this daily chart is saying things are much better. And that's the reason why I said keep your eye on aspects that are very important within sector rotation. Look, the SMHs, let me go there again. It's not a fantastic looking chart in the sense that there's a bit of a risk here. Would I buy it because it's part of the market? But it's holding. The MACD is good. Stochastic's at 80%. The weekly chart is making this cup formation. It has this Chapman wave inside buy mode, which has the daily, a shorter term time frame going to a D, which is done. So I'm watching it closely. If the SMH is trading at 88.52, trade today or Monday below 87, it says, uh-oh, now you got to be careful, because the pattern says the weekly chart could start to make an arch formation. If in fact it holds very well by the end of the day, and even it's at 88.52, if it closes anywhere between 88.35 and 88.75, that'll be outstanding action. The IBB, same thing. Trading at 335.23, it has the same look as the commodity index, same look as the on the daily, that is, as the SMHs. And here we are. There's this look. If I had to draw a little chart formation here, there's this pattern that I call the falling axe right there. And if it at any point, if it holds very well and it becomes the go-to area, as the fund managers say, okay, what can we buy? We've got to do something. Beginning of the new season, we're back. Summer's over. And what do? Well, what they would do is they'd buy what's holding well. And that's why I'm looking at the IBB and I'm saying, hey, this has a chance. If the IBB holds well, it has a chance next week to go to 337, break out for another leg up to a leg C, even if it's short term. But if it breaks down and goes under 328 by Wednesday, this Wednesday coming, that's a problem. Let's go to Dan in Alpharetta, Georgia, I believe it is. Dan, how are you?
Basil, doing well. Alpharetta.
It's a T. Alpharetta. Okay. Oh, it's TTA.
The insurance mecca of the Southeast.
Okay, good. They're going to need insurance, right? They're going to need to help people with their insurance, right?
As a matter of fact, that's what I'm calling on today. And I saw your comments on the Traders Corner about GE, and I think what those are is all these financial companies are getting ready to get hit over the weekend.
Yeah, there's no question, yes.
One of the ones I was looking at is Y, letter Y, Allegheny.
That's Allegheny Core. I thought that was transportation.
Yeah, well, they're a conglomerate, and they have...
Oh.
Yeah.
Wow, it looks like all the insurance companies. I had a list yesterday. One of our listeners gave me a whole list, and I did them on the air. Yeah, this is looking. It's at 523 right now. This, folks, Y is a symbol for Allegheny Core. It made a peak C. Well, it's an alternate count. Maybe I have to put a G/C in the monthly. It's rare to do this in a monthly chart, but I'm putting a G/C. It made it. Oh, isn't that interesting? This is so rare that in weekly and monthly charts, we go to a peak C and then all-time high and then collapse. This is one of the rarest things that I've seen in all my charting of hundreds of thousands of charts, it's rare to have weekly and a monthly at a peak C minus potential. Oh my goodness, and there it is, G/C in the daily. Hey, can you hold on? I want to have a good look at this. This is not good news.
Be glad to.
Okay, do you have a position?
No, I'm looking to pick it up at 513, but we'll see.
Okay, all right. We'll be back, folks. We'll be back with Dan Alpharetta, Georgia, and we're looking at Y, which is the symbol for Allegheny Corp. The futures are now down 61 in the Dow.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. We're back, and we're on. This is fascinating because I did this just a short while ago because I was looking at all the transportation stocks that I'm always familiar with and I follow. And I had a pattern. There's a pattern that I spent a lot of time on years ago. It's called the Chapman Wave Flat Base Restart, and then there's the unconventional Chapman Wave Flat Base Restart. So it's this Technical Friday. I don't have time to do it, but what I am going to say to you, Dan, is that I'm going to do a little work on this over the weekend. I'm not sure if I'll be able to show it in my Traders Corner for my weekly updates that start on Saturday. I'll try. But this is a pattern that I looked at and I gave it the benefit of the doubt, and I left it as a C right there in the weekly chart. But it has all the characteristics of what I call a Chapman Wave Restart, and I'll discuss it maybe Monday or Tuesday. But basically, I'm looking at it and I'm saying, I would have patience. I think your 213 area is a good way, it's a good place to start looking, but the 200-period moving average at 505 is really the target area. So I think between your 513 and 502, That's the area where I think that it would start to look attractive. But the speed that it's had coming down, this is why we're looking at Allegheny Core. I'm just going to say have a little patience, because even if it makes a low, it's going to have to do a bounce and then do a retest. So keep your eye on it. But as a longer-term position, when it straightens itself out, I think it'll be back in the running. It's always back in the running. So yes, but it's a little early. I hope that helps you.
Thanks, Basil.
Thank you very much. So, folks, we're about to wrap up, and we're going to. You got Tommy Jr. giving you an update. Then you've got Larry Pesavento. I mean, come on. What more do you want? It should be a great day today. And remember, if at about 10:20 this morning Eastern time, and let's call it an hour after the open, if the Dow is down, I would say minus 40, but I would say minus 60. The S&Ps are down minus 8, and the comp index is down minus 18 or more, then it's going to be a lousy close. But if there's any rotational aspect to this and the market holds up pretty well, watch to see if there can be at least a holding as money managers go to maybe the IBB, maybe the SMHs. Those are your clues. Watch the VIX index. VIX index goes to 1250. It's going to go down. Have a great weekend. See you Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.